eighth point is accrual concept. So this concept states that while preparing income and expenditure account, we only need to record receivables or payables instead of receipts or payments. So this concept requires that income and expenditure are recorded when they become receivable or payable rather than when they are collected or paid. That is, transactions are recorded based on income earned or expenses incurred irrespective of actual receipts or payments. Next, matching concept. This concept states that the revenue earned and the cost incurred to earn such revenue needs to belong to the same period and hence they need to be matched. This will help ascertain the results of the business operations. This concept serves as the basis for calculating accurate profit during the period. Verifiable and objective evidence concept. This concept requires that all financial transactions shall be supported by documentary evidence. Such evidence should be easy to verify and provide unbiased proof of transaction. Next topic is double entry system of accounting. As per dual aspect concept, every financial transaction has two aspects. One where the business receives the benefit and the other where it provides the benefit. Therefore, every transaction should be recorded in such a way that its effect is reflected in two places in a business books of accounts. The receiving aspect is termed as debit aspect and the giving aspect is termed as credit aspect. Therefore, every business transaction will influence two accounts. One will be debited whereas the other will be credited. The next topic is rules of debit and credit. So following table summarizes the rules applicable to different kinds of accounts is shown in table below. Here they are saying that if the value of the asset increases, we will debit the asset, and if the value of asset decreases, we will credit the asset. Now what is the mean of increasing in the value of assets and decreasing in the value of assets? So when we purchase any kind of new assets for the business, so that means we are that means the total fixed assets value is increasing in the business. So that's why we debit the asset account. And if we are selling any old asset by depreciating its value, so it means it is like the value of the asset is decreasing. So in that case, at the time of sale of the asset, we credit the same. We credit the assets account. Next is liability. If the liability increases, we will credit the liability. If the liability decreases, we will debit the liability account. If the income increases, we will credit the income account. If the income decreases, we will debit the income account. If the expenses increases, if the expense of the business increases, we will debit the expense account. If the expense account decreases, we will credit the expense account. If the capital value increases, we will credit the capital account. If the capital account value decreases, we will debit the capital account. Now I'm giving you 1 minute to go through these golden rules of accounting. So here there are three categories of business transactions under golden rules of accounting. Number one, transactions involving individuals or other business entities. Transactions involving assets, goods and cash. Transactions involving income, expenses, losses and gains. So these three types of transactions are based on the three types of accounts. So now we will discuss those three types of accounts. Personal account. The rule of the personal account is debit the receiver and credit the giver. And there are three types of personal accounts: natural personal account, artificial personal account, and representative personal account. And next is step 1. They have given me the example. Daksh Enterprises Private Limited paid 54,000 to Roshan Electricals Private Limited by ICICI Bank by check number 462001. So here they have identified that there are two ledgers involved in this transaction, Roshan Electricals and ICICI Bank. And step number 2, they have identified the category from which these two ledgers belongs to. Roshan Electricals belongs to a company, hence it is classified under the personal account. And ICICI Bank is an institutional account, hence it is also classified under the personal account. And in step number 3, they have applied the rule in two ways, either by rule of debit and credit and rule of golden rules of account. So I am giving you 1 minute to read all this information. Next is real account. The golden rule of real account is debit what comes in and credit what goes out. And there are two types of real accounts, tangible real accounts like furniture account, plant and machinery account and cash account. And intangible real account like goodwill, trademark, copyrights that cannot be touched. So for example, land and building is a fixed asset, cash in hand is a current asset and goodwill is an intangible fixed asset. So, for example, Daksh Enterprises Private Limited purchased furniture of rupees 9,000 for cash. So, here they have identified the two ledgers involved, furniture account and cash account. Now, in the second step, they have identified the category they belongs to. So, furniture account is a tangible fixed assets of a business. The value can be measured in terms of money, hence it is classified under real account. And second is cash. It is a tangible asset and payment made by cash, hence it is classified under the real account. Alright. Next is in step number 3, they have applied the rule in two ways, either by rule of debit and credit and rule of golden rules of accounts. So giving you 1 minute to go through this. Now the next is nominal account. So the golden rules of nominal account is debit all expenses and losses and credit all incomes and gains. And they have given me the example like Daksh Enterprises Private Limited purchased goods worth rupees 7,000 for cash. So in step number 1, they have identified that two ledgers are involved, purchase account and cash account. And in step number 2, they have identified the category they belongs to. Purchase account is the cost of buying goods for sale in the ordinary course of business, hence it is a kind of expense. So it is classified under nominal account. And cash account is a tangible asset and payment is made by cash, hence it is classified under the real account. And in step number 3, I am giving you 1 minute to go through this step. So this is the last topic of this video. So I hope you understood each and every topic of this video. I'll get back to you in next video. Thank you so much.